Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, March 11th. This week the markets remain still in a very choppy mode, pretty much directionless as far as major trends go, and still pretty much not an investment market. If you're a day trader, if you're a trader on the floor of the exchange, these are great markets, but for investors who are just simply investing the money looking for the major trends, we are not quite there at the major turning points yet. The markets still largely remain in betwixt and between mode. Let's go right to a chart of the Dow, which I have in front of me. I'll bring it over here a little bit for you so you can see the latest action more closely right here. Last week I told you I wouldn't be surprised if the Dow climbed to higher to test the underneath side of this uptrend line here, and that's what the market has been doing over the last few days. We shot up 100 points or so. We're now pushing the 10,600 level. I suspect we will get new recovery highs very soon. If you look at this intersection of two lines here, we have an uptrend line and we have the top of this trading channel, this prior cyclical trading channel, intersecting right here. And as I've indicated in prior videos, when you see two lines intersect like this, it tends to act as a magnet for the market. So I suspect we will get a new slight recovery high just around 10.8 right here in the next week or so, but that should be about it for the Dow. I suspect we'll then trade back down to the lower end of this channel, and then perhaps even much lower down into this large void of white space here. There is a possibility we could go over 11,000 in the Dow, but cyclically we are in the time window for a major high for this rally. We got the first high in January coming off the 12-month cycle which peaked, and the 24-month cycle which peaked. The 40-month is still pointing higher, and is what's causing this rally here, but that too is peaking. So we're in the time frame for a major top, and we don't want to be buyers here, aggressive buyers here, except for some unique situations and some natural resource stocks. We do want to be looking for a major top and perhaps taking out inverse ETFs on the broad stock indices very soon. So stay tuned to my columns and to my videos on that. Let's flip over now to the gold chart. Give it a second to come up here. Here it is. Gold is doing pretty much exactly what I outlined for you in last week's video. We traded back down to test the lower end of this channel here. We popped back up today. There's a good chance we'll get up to the 1160 area. We'll have to see then what happens. If we can close above 1160, above this high back on January 11th at 1166, we could be in store for new record highs in gold and a major explosion higher in gold prices. But until that happens, this is not a time to be aggressively buying gold, except for holding your core gold positions. Gold could run up to 1160 and then trade back down to under 1100. It's still very much in a sideways short-term trend, long-term still very bullish. Let's take a look at the dollar index now. Here too we're seeing a lot of sideways action. I'll pull this over for you. Exactly what I anticipated. This is not a trading market for investors in the dollar just now. It's very choppy. Again, it's only a good market if you're a very, very short-term trader and can get in front of everybody and take advantage of these short-term swings, which is very difficult to do even for the pros, or if you're a floor trader in the futures currencies where you can capture some of these moves. As an investor, this is the type of move that I call chop city. If you try to take advantage and jockey for a long or a short position here, you're just going to get chopped up. I suspect the dollar has a little bit more upside in it. The short-term cycles there still point a little bit higher for the dollar, again within the confines of a major long-term bear market. Actually, when you think about it, the dollar off its lows back here at the 75 level, it's only up about 8%, a little more than 7 or 8% in the past few months. That's no major move in the dollar. Everybody's saying, oh, the dollar's turned a corner, it's gone into a long-term bull market. Well, it's only rallied about 7 or 8% in that time, which is like the Dow going from 10,000 to 10,008. I certainly wouldn't call that a bull market. A rally, yes, but a rally within the confines of a long-term bear market, which will see substantially lower prices, lower purchasing power for the dollar in the years ahead. On the fundamental news, we are seeing some resolution with Europe probably bailing out Greece. That's merely kicking the can down the road. The sovereign debt crisis will crop up again in Portugal and Spain and Britain, eventually in the United States within a couple of years' time. It is a hot potato. It is not going to go away. It is merely in a brewing stage right now. For some of the smaller countries like Greece and Portugal, the can will get kicked down the road, but the can will not get kicked down the road when it comes to Europe nor the United States. With that, please stay tuned to everything. As choppy as these markets are, we are reaching very critical turning points where big moves will emerge and where the biggest money is made. Till next week, this is Larry. Have a good weekend.